Hey everyone, Alex Late here from Tried and True Mortgages. Just going to do another Tried and True Academy episode 2. We're going to be going over a purchase process, for example, scenario and client, just to give you an idea of what is involved in a purchase and sort of go behind the numbers a little bit. Again, if you don't know who I am, my name is Alex Late. I'm with Tried and True Mortgages. We help people with home financing, refinancing of your home, and equity takeouts. So I'm just going to share my screen. We'll jump right into it. All right. Okay, good. So to start, we're going to look at a gentleman named John Doe. This is obviously just a made-up client who we're going to go through a scenario for. So John Doe is purchasing a new home for $600,000. He currently is putting 20% down payment for the purchase and would like to calculate the cost of owning the home. He currently earns $6,500 after tax income every month, and his current expenses total $4,000, $2,000 of which is rent. So he currently rents, doesn't own a home. Let's do a quick cash flow analysis for John Doe. So his monthly income, 6,000, that should be 6,500, my mistake. 6,500 minus his living expenses, just general, plus his rent expenses equals $2,500. Alrighty, so new purchase. So what is it actually going to cost to own this home? So he's purchasing, like I said up here, for 600,000. 20% down payment on 600,000 is $120,000. Now just remember, whenever you're purchasing a property, you don't just have $120,000. You're going to have some legal and land transfer if you're in Ontario, Ontario, Canada, land transfer taxes. So we estimate this on every purchase to be about 1.5% of the purchase price. In this case, somewhere in the range of $7,500. Okay, so it's not just the $120,000 that you need. You also need about 127,000, 128,000. In this case, we do the home value, $600,000 minus down payment, leaves you with a mortgage of 480,000. Interest rate, we're going to use 5.75. As of today, in Hamilton, Ontario, or I should say in Ontario, Canada, because generally the rates have went up all across Canada. But in Canada, we're looking at a 5.75% interest rate for a 5-year fixed. Okay, if you went with a variable rate, you might be able to get yourself down to a 5% or 5.15. But fixed as of right now is in the 5.75 range. We're going to go with 25-year amortization. So amortization is how many years it'll take you to pay off this mortgage. And then the mortgage payment, knowing all these things, will be about $3,020 per month. Okay. Home insurance, if it's a detached home, semi-detached, townhome, probably looking around $100, somewhere in that range, $105. And your utilities every month, water, I guess hydro, water, gas, electrical, those type of things. We just added in, plus we added in maintenance in there, about $250, okay? The total it cost John Doe, add these three things up. So mortgage plus home insurance plus utility and maintenance, about $3,300 per month, okay? $3,375. All right, so obviously this is higher than what he currently pays in rent, but he owns the home in this scenario. All right, so how does this change things for him? Oh, before I do that, I should show you, if you wanted to reduce your mortgage payment, you can always increase your amortization up to 30 years. The only thing with that is that you'll have a premium on your interest rate then. Normally it's between 10 to 15 basis points. So for example, if we wanted to go up to 30 years here, you'll see 30 years, decreases the payment to $2,800. However, you probably have a premium on the interest rate, so let's go up to 5.90%. So we end up at $2,847, okay? Variable rate, again, We go back to 25 years. Variable rates, you'd be looking at, let's go 5.15, somewhere in that range right now. Brings your payment down to 2,800. So change your amortization to 30 and go to 5.3. Again, you're at 2,600. So not too bad, not too bad. The thing to know about variable rates or adjustable rate mortgages, ARM as they're called, is that they will fluctuate with interest rate changes based upon the Bank of Canada. So likely in Canada, we're going to see a couple more rate increases, hopefully not too much, but somewhere in the range of 0.25 to 0.75. So we're looking at, if you had a 5.3 at this point, you might then be at a 6.05, okay? Within 12 to 18 months, depending on what happens with inflation and the economy, likely we'll see interest rates come back down. But as of right now, this is sort of what you're expecting. So let's just quickly change this back to our 5.75 scenario. Oh. And go 25-year amortization. We're at 3,300. So where does this leave us with the updated cash flows? Monthly income remains the same, 6,000. That we update this. Income 500. Living expenses still 2,000, let's say, plus home expenses of 3,300. Total expenses about 5,300. So it still leaves them with a good cash flow. So we went from $2,500 cash flow positive to $1,100 and $2,500. So really, really good in this scenario. He can definitely afford this payment. So after analysis, John Doe has the ability to afford this mortgage and fit the home expenses into his monthly payment. It's important to complete a cash flow analysis to ensure you cover the cost of purchasing a home. Of course, guys, this is really important because you don't want to fall behind on payments and hurt your credit score. So what I mean by that is, if let's say this cash flow number was negative and you couldn't actually afford the payments, if you miss a payment, your credit score is going to go down, right? And it could go down 30, 40, 50 points with one missed payment, right? So not only do you not want to do that financially because you won't be able to, you'll be what's called house poor, but also for the longevity of using credit and borrowing and being able to invest in the future potentially, you don't want to destroy that option for yourself. Okay. So yeah, that's it for this purchase case study scenario. If you have any questions, definitely don't hesitate to reach out. If you haven't seen my last video about refinancing, you can check out the refinance case study as well. We just go over a quick scenario there. And in this one, I wanted to show everyone how a purchase works and do a cash flow analysis. Again, this is Alex Late from Tried and True Mortgages. We help our clients with home purchase financing, refinancing, and equity takeouts in Ontario, Canada. Thanks so much, guys. Have a great day. Bye-bye.